All right, guys, this is Steve Simpson here with Central Florida Property Management. Just wanted to do our Q4 2025 market update. So here we go. I guess little Cliffs Notes version here for you. What we're seeing here is fairly expected and consistent with what we have been seeing. I'll get into more details, but on the sales side, things are pretty much flat. On the rental side, things are also fairly flat, decreasing a little bit, although that's to be expected with just seasonal differences in the real estate market. As most of you know, the market is very seasonally dependent, where the busiest time of year is in the summer and the slowest time of year is in the winter. I always think of really giving in the middle of January is like the absolute bottom of the market. So not surprising to see data we pulled from the end of December showing, decreases compared to the rest of the year. So yeah, with that said, let's get into this. So yeah, a median price is sitting at $380,000 at the end of 2025. That's down, $2,000 from what we saw in Q3. I believe it was $378. So pretty much flat there. Also, kind of par for the course we've been talking about. Single family basically propping up the other parts of the market. Condos continuing to take a beat. Talked about that at length before regarding their direct competition with multifamily properties, as well as the regulatory changes that have really beaten down their prices, made them more expensive to own, harder to finance, all that sort of stuff. And not surprisingly, inventory is up. Again, kind of, beating a dead horse here, but basically inventory continues to rise. Prices stay pretty much the same, depending on property type. And yeah, so we'll see what 2026 holds. Looking over to days on market, we'll see here a median days on market of 62 days. That is a little different from, a little different in terms of one day. It was 63 days on market. I'm sorry, 63 days on market at the end of Q3. So again, pretty much flat. I would expect days on market to start going down as we go into as we lead up to the busier time of year. Busy season really starts, mid to late April, ends, mid to late August. And usually, if you think about it as like a bell curve, things will start getting hotter. Days on market will come down. Prices should go up a little bit. Transaction volume should go up a little bit as we lead into that April timeframe. Again, April to August should be busy, and then they'll start going down. So I would imagine see this number drop in the early, as we get closer to that. But yeah, like I mentioned to begin with, it's just pretty much more of the same in terms of days on market, prices staying flat, inventory rising, all that sort of stuff. Moving over to rentals. Again, pretty much more of the same here. You'll see that our average rent is actually down about $50 per month from Q3. But again, factoring in seasonality, that really isn't that surprising. I would expect prices to be lower in December than in October. And, that $50 a month is probably in line with what I would expect. Taking a look at available rentals, it's fairly flat. We had about 3,700 at the end of Q3. Again, actually, I would expect that to be a little bit lower at the end of December, just because usually there's less properties available on the market because there's less people looking, and just the way the market kind of dances there. Looking into specific property types, we'll start with houses. Again, kind of beating a dead horse here. Houses just continue to hold the market up, generally speaking. Average house rent did decline about $100 per month, and days on market increased from 54 to 61. But again, given the seasonal differences, that doesn't surprise me that much. If we look here on our chart, we talked about, I believe back in Q3, we're basically seeing what we would expect. Things pretty much flat. Now, usually what we see is when we hit here, things come down a little bit. It looks like prices basically held on and then basically started going down in November. You'll see now prices starting in January are actually below where they were at the end of December. But as you see last year, things start usually heating up in January. So I would expect this number when we do our Q1 2026 analysis, I would expect this 2,400 to be, I would expect the Q1 2026 to be higher than 2,400 and days on market to be lower. Not really much more to make of that. Again, things are pretty much flat, factoring in seasonal differences. Moving to townhomes, kind of the in-betweener asset class here. Average rent is down $100 with townhomes again. Again, that's not that surprising given the seasonal differences. Days on market also up from 57 to 66. Also not super surprising given seasonal differences. I remember talking about this before. I'm not so sure I believe some of this data on this particular graph. It just seems way, I don't know, too varied for me to have like a $200 spike in the middle of the year. But if you take that out, it's pretty well flat. Prices end the year pretty much where they started. I would expect, again, this number to come up a little bit as we edge into the busy season, and this number to come down. I do think townhomes, because they're a little bit more adjacent to multifamily, which we've seen a large influx of multifamily supply, because townhomes are closer to that than single family. I don't think the change will be that as pronounced as a single family change, but I think generally speaking, it's still a preferential asset class to condos. So I do think it'll probably start performing better as things go along. And then getting into apartments and condos. As you guys know, this is my my least preferred class, just for, basically what we're seeing now, having all these things out of control of our investors happen, both on a federal financing level, with Fannie and Freddie and the securitization of mortgages involving condos, and then on the state level with the recent regulations, which have basically made owning condos more expensive. These things that are out of our control have a much bigger impact in this sphere of things than they do in other asset types. Now, the good news is this is down about $60 from May, which is not honestly that much, considering I think it was down more than that from Q2 to Q3. And again, this would play in a seasonal. There'd be some seasonality playing into this number. So I actually think that's probably a good sign that maybe we're hitting the bottom of the condo market impacts of all the things I mentioned previously. And coming down here, again, not the prettiest sign. You compare this, we started the year at 1,700 and ended at almost at 1,600, 1,630. You compare that to, like I mentioned before, townhomes, which was flat, and single family homes, which, actually went up for the year over year. So, again, this is not that surprising given what condos more directly compete with the multifamily stock, all that sort of stuff. From what we are personally kind of seeing, feeling, experiencing, it actually felt like the holidays this year were busier than what they normally are. And I don't, this is just from what we're experiencing. I don't have any super hard data on this from what we're doing, but it felt like it wasn't as slow as it had been in the past. It also feels like things are, they're starting to get some lubricant in the system where things are starting to kind of move more. It's not feeling as stuck as it has been. So I'm cautiously optimistic going into 2026. I've definitely been wrong before, but it feels like the worst is probably behind us. And, basically having this stuck market for a few years, it feels like it's ready to unstick, which I think will help pretty much everybody in both the rental and sales side of things. Further, from my understanding, multifamily construction has dramatically slowed down. It lags about 2 or 3 years behind interest rates. And so that's pretty much where we are now. That should help raise the price floor for all of our rentals, especially obviously condos and apartments. But it does feel like, things have been falling. It feels like we're hitting kind of a point where things are not going to fall anymore, or at least not fall as much as they had been. So hope I'm right. We'll see what 2026 brings. If you guys have any comments or questions, please leave them below. I love hearing from you guys. And Happy New Year. Talk to you soon.